Right, welcome everybody. Just going to do a short session on a couple of things, particularly pertinent to what's going on in the markets at the moment. Before I carry on, my name is Mike Hamilton. I'm formed Trade the Easy Way in 2009. I've been trading, well, I've been investing since 1984, 85. I've been day trading since 2005. Okay, so I'm a veteran. I've been around the block, and what I'm doing here is just sharing some of the skills and helping you, supporting you in seeing what is going on in these markets and trying to lead you into some opportunities here. All right, so let's start off by looking at what's happened on the S&P today. This is the US S&P 500 index in a 10-minute chart. Couple of things to note. That was the open move, that was the pullback we bought, and that was the direction. Short targets today because in an hour we've got the Fed minutes. So what's so important about that? Fed minutes is a chance to get an insight into what the Fed are thinking in terms of possible next interest rate rises. And at the moment, as you know only too well, we've got some very strong, persistent inflation coming into the economies, and that has spooked markets. The S&P is 20% off of the highs, the most recent highs going back in the last year, early January. In fact, it was the first week in January, wasn't it? Yeah, if you take the first week in January and scale that down, in fact, let's do that now. Yeah, so that's the first week in January, and we are just attempting to, we're trying to base here and pull up from what has been a 20% drop. So we've got a trend line coming underneath, we've got a trend line coming above us. So you notice that's a funnel. If I pull that out, you'll notice that's a funnel pattern. So if we can break this high and stay above this funnel, then I think we can see a short-term recovery. I'm not looking for a massive bull market. I'm just looking for a short-term bounce, basically, because this is a effective. This is a 1, 2, 3. They put a 1, 2, 3, 4, 5, and then we're getting a huge. We didn't get a three-wave correction. We just got this huge bounce, and then we've got a 1, 2, 3, 4, 5, 1, 2. So we're potentially in a three-wave correction pattern that will take us up to 4,100. Potentially, if we can break out of this funnel and see some volume increase here. Okay, so we have seen a volume increase in the last couple of days trading. So the volume has come in on these lows, and we're just waiting to see if we can break this. Tomorrow we got US GDP, so it's between now and 1:30 UK time in the afternoon. Tomorrow we've got a lot to get through. Hence the reason why the market is very slow at the moment. It's typically slow this time of day anyway, but it's even slower than normal. All right, if you look at the weekly chart, it's worth noting, just because I'm day trading doesn't mean to say I don't spend time looking at these big time frames. These big time frames are really, really important to what I'm doing. So here you can see we've come out of this funnel pattern up here in middle of January. Subsequent highs got sold into end of March, and here we are at some support, just trying to find. Oh, good to see you, Tom. Glad you joined us. So we've got a potential 1, 2, 3 wave correction having come out of this pattern. We've got a lot of support here from early 2021. So we went on a decent run in early 2021, Of course, the dynamics have completely changed now with inflation, rate rises, geopolitical issues in certain part of Eastern Europe. So, like I said, I'm just looking for an initial bounce into about 4,100 before we potentially resume another leg down. You could even argue this, if that's wave one, that's wave two, you could even argue wave three is not complete. We could so easily come all the way down to 3,700 and even lower. But at the moment, daily chart suggests we could get a short-term bounce. Right, so in terms of day trading, let's go back to the 10-minute chart. So what we've got here at the moment, let me go through a few things. This deep purple line here is the Friday close. That's the Friday night close, end of week close, not the Friday cash close. Big difference, because the futures market goes on for 30 minutes after the close. So the cash close is 9 o'clock UK time, and the futures market is closed officially at 9:30. All right, so if you then, this dotted blue line is yesterday's cash close. So we're sitting above the cash close. This is the pink zone is the 130 data range. We had data at 130 today, core durable goods. When we came into the market, cash market, we broke up and then pushed up into this trend line resistance. So at the moment, we are having done a full move, up into that resistance. We pulled back, and now we're just above the box, above the gap, and attempting to move. But you can see how the volumes just tailed off. This is when not to trade. You know, it's doldrums. Everyone's sitting on their hand, or the big money is sitting on his hands, waiting for this 7 o'clock information to come through. If we find, I suspect that what we might do is pull right back to, might do a whole boomerang right back to this box. And then if that holds and we come out of the box, then we could go back up to the highs and beyond. If this holds, maybe this is going to hold already. And maybe this pullback's got bought. So if this is a 1, 2, and we've completed wave 2, wave 3, all the time we hold above here, I think wave 3 is potentially in play. Then we could do that distance again up here, which I would suggest that would be about, yeah, into 4,000, 4,020, say, if we get that kind of move out of this. In the meantime, yeah, like I said, it's doldrums, the volumes come off, don't trade it. The best thing to do is this, at 7 o'clock, if you're going to trade this, and it is an important part of the month even, it's quite a pivotal part of the month. Best way to trade this is to see where we are, is to back off, go into the data flat with no trade on, and then see where the move is in that 10-minute period. So let's just, for example, let's say we've just had that piece of data out, and that is the 10-minute period from the outcome of that data. Then I would suggest this is viable, because we've broken up through it. So we've broken up through the period. Let's get that again. If we've broken up, then you buy a pullback and then take it in the direction of that move. Once the data's not out, this is just a scenario. Likewise, if we were to close under here, I would short into that cash close and then see if that can break down. Okay, so that's what I'm doing in the trading room. This is how we don't trade off a 10-minute chart, but I'm just showing you this is a sort of a summary, a basic of what we do in the trading room. But obviously I'm not going to sit here and teach you the system, because if you want to come in the trading room, you're very welcome, but you will need to come on our program. All right, but this is a bit of a snapshot of the kind of way how the system works in the live trading room. Okay, let's go back and look at the 1 hour chart, because what I want to show you next is this is where this purple lines come from. In fact, let's have a look. Have I got that right? Yeah, this purple line is slightly inaccurate, slightly too low. So the Friday close is actually 39.05. That's the bar, the very final bar of the week on a 60-minute chart. Okay, you can see how this is typical. We've gapped up. This is really important. If you gap up, potentially all dips are buyable, as long as if you overshoot the gap, as long as you immediately close higher, then that's still bullish. All right. So if we sustain these levels now, having broken above the gap there, and we break these highs, then I think we can get back to last week's high. Okay, so that's a 60-minute chart. Let's have a look at the Dow, because the Dow is different so far this week. The gap has not been filled. Let me just take this off. Here is the gap from the Friday close. Don't know why I've not got a purple bar on that. Let me put one on now. Any questions, let me know. Right, that's the Friday close. So you can see we've got some lower close in the 60-minute chart. It looks as if that is potentially heading down. So the reason why I've pointed this out is because if you've got a gap that's not filled, not been reconnected with, that could be a magnet for the markets to come down and find that price level. So all the time you've got that open. Now, whether or not that gets filled this week, it's not a given, but at some stage gaps get filled. So if we stay above this level here and don't touch that gap, I will actually keep that gap on my chart, because if we get a subsequent sell signal, that is going to be my target for that market to come and close that gap. Markets don't like gaps. Anybody who's not familiar with how gaps work, markets do not like gaps. All right, so all the time that makes me nervous, the fact that is unfilled. Because until that's filled, I don't think this market can potentially break up. But I could be wrong. Sometimes gaps can be left for days, sometimes they can be left for weeks. The euro US dollar had a gap for, I think it was something like 18 months, I can't remember now. It gapped up and failed to close the gap for a very, very long time. Okay, so this is a good example of when not to trade, because it's just completely, it's fairly static at the moment. But we got a good move from the open period, and we got a decent move yesterday in the room. We shorted the Dow into my actual target. We had a sell signal here, we broke support, so we shorted up here, and look, we were looking for a gap fill, but we took it off at 440. 440 is a bit up here somewhere. We had a major intraday support level up there at 440. Market seemed to stall on the drop, So we took it off. We got about 240, 245 pips in about 45 minutes yesterday. And today we've only got 90 pips so far, but the day's not over. So this is the kind of thing that we're doing in the live trading room. This is how we're marking our charts up. And as you've seen with the way in which I've looked at the daily and the weekly, you can see what we're looking for on that front. Let's have a quick look at the oil, because the oil, we've had invents on the oil now. You can see at the moment the oil is weak. We've been very range bound the last 5 trading days, very range bound this oil. I've hardly touched it. And the invent range is here. The inventory is coming out at 330. That's the result of what's happened. Notice how that retracement to 109, $109.70 has so far seen that market come off. Okay, so I'm going to keep this range on my charts, and then I will use that as the week unfolds. Okay, if you want to join us in the trading room, it operates 5 days a week for the first 45 minutes of the open. So come on to tradetheeasyway.com, come down to the day trading button on the drop down box, and this will tell you about the system and the training program. And then once you come through the training program, then you can come into the live training room 5 days a week. There's the book now button. That I need to go and update the dates for that, but that is coming up in next Monday, in fact. Right, so markets are very quiet. Gold is not doing a lot at the moment. We need to get, gold particularly needs to get this information out of the way, and of course GDP out of the way. I'm looking for this to come down to this 1835. I think this might, it's not holding up. We get a series of lower highs, lower lows. I think this needs a sharp move down to get the buyers back in. Brilliant. Any questions? You've been very quiet, very patient. Anybody got any questions? So we've got a very precise rules-based way to prepare for each day. And so we wait until the market gets open, line the markets up and pick our spot by using the system. And yeah, in times like this, in doldrums, we will just stand back and let the market wriggle around until we get key moves out the way. Brilliant. All right, well, no questions come in. Thank you very much. Good to see you, Tom and Cedric and the others. Watch out for the Tuesday events. I will update those and send you links out for it's going to be, it's normally Tuesday. I've only done Wednesday because it's an important day today and tomorrow. All right, so thanks very much, and see you next Tuesday. Any questions about the program, let me know.